Good afternoon, everyone, and welcome to the Budget and Finance Committee meeting for the City of Franklin. This is Thursday, December the 5th, and I will begin the meeting with a call to order, and I'll do that through a roll call vote. Alderman Potts, how do you vote?
Present.
Alderman Peterson, how do you vote?
Here.
And Alderman Baggett, how do you vote?
Here.
And the chair votes here. Next item is setting the agenda. Do we have any additions, deletions, or anything that we need to do to the agenda? If not, I'll entertain a motion to accept the agenda as published.
I move to accept the agenda as it was published.
Second.
Proper motion to second. Let's do a roll call vote on that. Alderman Potts, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And Alderman Baggett, how do you vote?
Yes.
And the chair votes yes on that also. We do have an item on here where we have an opportunity for citizens to be heard if you are wanting to present something to the committee. I really don't see anyone here, so I'm going to go ahead and close that, and let's go to approval of minutes. So we'll do the item number 2, consideration of approval of minutes, October the 10th, 2024 Budget and Finance Committee meeting. Everyone had a chance to look at those. Any corrections or additions to the minutes of that meeting? If not, I'll entertain a motion.
Move for approval of the minutes.
Proper motion and a second.
Second.
Let's do a roll call vote on that also. Alderman Potts, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And Alderman Baggett, how do you vote?
Yes.
And the chair votes yes on that also. Let's go to item 3, which is new business. Election of a chair and vice chair effective 2025. This is something I think we do every year. We have an opportunity to elect a new chair, or I guess hold over for another year the chair that's there. So I'll entertain a motion for election of chair, and then we'll go to vice chair.
I move for, I guess I'd say Alderman Barnhill to become the chair.
All right.
Alderman Peterson, could you turn your mic on, please?
Oh, sorry.
I will second that motion
Okay.
of Alderman Barnhill that Alderman Peterson made.
Any other motions?
I move
Then-
we pass this by acclamation.
Okay, then let's do that then. Do we need a voice vote on? Okay, let's do a roll call vote on that then. Alderman Potts, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
And as the chair has said before, he's never voted against himself. So he will vote yes to this. Let's do the vice chair of this. Do we have a motion for someone to be vice chair?
I'll make a motion for Alderman Peterson to serve as vice chair.
Proper motion, is there a second?
Second.
You want to do that by acclamation also?
We can do that, sir.
Let's do a roll call vote then. Alderman Potts, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
And the chair votes yes also. I noticed, Alderman Peterson, you did not vote against yourself. That's good. Let's go to item 4 then, which is a report of the city's external auditor, Crosland PLLC, and presentation of the fiscal year 2024 annual comprehensive financial report. Do you want to introduce that?
Yes, sir. Thank you, Alderman, Chairman Barnhill. I'm very pleased today to introduce to the committee, we have with us from the city's external auditor, Crosland, we have Jennifer Matronock, who is our audit principal, and we have Katie Ferris, who has been our audit director this year. And just a couple of quick comments before these ladies give their presentation to this committee. Certainly, while the title of this committee's Budget and Finance Committee, one role is to sit as our audit committee. And so you'll be serving as the audit committee function here at our December meeting. And something that is very important into managing government funds is this audit process. There are many reasons why we are required to have an external audit. I don't even think I can list all those reasons why to you quickly, but certainly the state of Tennessee does require an external audit to be performed. And we are required as a city to prepare our statements in accordance with generally accepted accounting principles. We also have outstanding debt, and the disclosure requirements for our debt requires us to have an external audit. We do receive federal funds, and to receive federal funds as grants, we are required to have audits. So there's lots of, and there's more reasons than that, but those are just three big reasons why we are required to have an external audit performed every year. And Crossland is engaged to perform that service for us. So certainly an audit is not only looking at what we record as our revenues and expenditures, they are also looking at our internal controls. They are looking at how we manage our grants and that we are fulfilling our obligations, and also that we are presenting our financial statements fairly and accurately to the best of their review, so that those who are reviewing our financial statements can have a confidence that they are prepared accurately. So with that, we are very glad to have Katie and to have Jennifer with us and hear their report.
All right, I'll start with going over the results book. It's the one that's got a picture of downtown Franklin on the front. So the first page is just a letter to the Board of Mayor and Aldermen, emphasizing an open line of communication between us as your external auditors and the Board and Aldermen as those charged with governance of the city. Starting on page 2 is our report on the results of the audit. So we have drafted our unmodified opinion on the city's financial statements. Unmodified is a clean opinion. That's what you're seeking. So that's always great. And we can affirm that the city will meet the reporting deadlines of federal and state governments, as well as the GFOA Certificate of Achievement program. We are independent of the city within the requirements of the AICPA and the government auditing standards. Listed at the bottom of page 2, you can see the list of the engagement personnel who worked on the city's audit this year. Page 3 discusses our responsibility under U.S. generally accepted auditing standards and the uniform guidance. Our responsibility is to plan and perform the audit to obtain reasonable but not absolute assurance that the financial statements are free of material misstatement. In doing so, we assess risks, we perform some tests of controls and walk through those controls, and we plan our tests on the balances themselves. And so we have completed our audit and can say that the financials are fairly stated in all material respects. Page 4, most sets of financial statements contain accounting estimates that management is required to make. For the city, the most significant estimates in the financial statements are your property taxes receivable and the related deferred inflows of those, the allowance for doubtful receivables, the useful lives and valuation of capital assets, fair value of the derivative financial instruments, and then the assumptions used to calculate the pension and OPEB liabilities, and as well as valuation of certain investments in the fiduciary pension fund. We do evaluate those estimates and believe that they are reasonable and appropriate. Significant accounting policies that the city uses are described in Note 1 to the financial statements. We evaluate those and have determined that the policies are appropriate and comprehensive under U.S. GAAP for the city. As far as audit adjustments are concerned, we would report if we had any. For the city, we had none, which is pretty standard. Margaret and her team does a great job. And then in Appendix A to this document are the audit adjustments for the Cool Springs Conference Center, and those are just the normal adjustments that management requests that we make every year. There are no discussions with management regarding alternative accounting treatments. Management is allowed to consult with other independent accountants if they choose to seek a second opinion on an accounting matter. We just ask to be involved in that conversation so we can make sure we relay all relevant facts and circumstances, but to our knowledge, there were no such consultations. We did not encounter any disagreements with management during the course of the audit. Any issues that were discussed prior to our selection as the independent auditors were in the normal course of our professional relationship and weren't a condition to our retention as the auditors. We did not encounter any significant difficulties in performing our audit. The audit went very smoothly. Again, as I said, Margaret and her team, they do a great job. They're easy to work with. They're very timely and responsive, so we always appreciate that. No material, fraudulent, or illegal acts were disclosed to us during the audit. We're not aware of any other documents that will contain the audited financial statements, but if that need arises, we will review the document to make sure there are no material inconsistencies. Regarding other information in the annual comprehensive financial report, we've read through that and noted no material inconsistencies or material misstatements of fact in the other information. Listed in the middle on page 7, you can see some of the areas of audit emphasis. And then some other procedures performed. We did perform our audit in accordance with uniform guidance over the city's major federal programs. The programs we tested for fiscal year 24 were the Community Development Block Grants, the Battlefield Land Acquisition Land Grants, the Highway Planning and Construction Cluster, and the Coronavirus State and Local Fiscal Recovery Funds. And we did not have any material weaknesses or significant deficiencies that were required to be reported, and no other findings for the programs. Recent accounting pronouncements. There's always new accounting pronouncements coming out. Management evaluates those, and we provide consultation as well where needed. Upcoming will be for fiscal year 25 is statement number 102 for certain risk disclosures. And again, as management looks into that, we will provide any sort of consultation needed. Other written communications in Appendix B to this letter is the management representation letter, which the city management will provide for us. Basically states that they have provided us with all of the information that we've requested, that they believe the financials are fairly stated, and that they've complied with all of our requests. And then in conjunction with our City of the Audit, we have also completed the audit of the Conference Center of Cool Springs. We've drafted an unmodified opinion on those financials as well, and the management representation letter for the Conference Center is included in Appendix C to this document. Any questions or comments on the results, but
Any questions from the committee? So are we ready for Jennifer? Jennifer, you're up then.
I'm going to go over the ACFR for the city next. I'm going to start on page 7. This is the Certificate of Achievement for Excellence in Financial Reporting. This was received for the ACFR for the 2023 fiscal year. Is this the 33rd year in a row to receive the certificate, which is excellent. Management prepares this ACFR. It is a very technical, difficult report to prepare, and they do an excellent job. So I just want to give them a shout out for that and tell them congratulations on receiving the certificate. With the certificate, they do receive comments from the GFOA. The State Comptroller's Office also reviews the ACFR and sends comments. The state had no comments at all, which is wonderful. The GFOA always has comments. You could send them a perfect report and they'd have a comment about it. And we have addressed those comments. They were pretty, in my opinion, small, insignificant comments. We've addressed them, made changes to the financial statements where they've asked us to. One of the comments was their opinion on how the PDF was laid out, so we'll address that. So that they can read it appropriately. So that gives you an idea on their comments. On page 13 is our independent auditor's report. At the top is our opinion. It's a clean opinion again this year. So I just wanted to point that out. That's what you hire us for. Management did a great job. And then going to go directly to the management's discussion and analysis. Starting on page 22, this starts discussing the government-wide financial analysis, which the government-wide, the statement of net position starts on page 30. You see this statement once a year when we present it to you during the audit. The government-wide, the statement of net position, it includes the entire, has all the capital assets, has all the debt, all that stuff on there, and I know you're used to just seeing the fund financial statements. So this gives a really good overview of that statement. The total assets in the governmental activities was $941 million compared to $937 million. $242 million of that was in current assets, which has your cash and AR. That increased a little under $1 million. That was due to increase in your revenues, your taxes, in your hotel, motel taxes, taxes, things like that. Your capital assets, they're $699 million in 2024 compared to $696 million in 23. Those increased approximately $2.5 million. Below that is your liabilities. $248 million compared to $222 million. Your long-term liabilities in your debt, it looks like your long-term liabilities increased. Your debt actually decreased due to payments. Your long-term liabilities, if you look on page 30, that increased primarily due to your net pension liability and your OPEB liability. The pension liability, a lot of that has to do with a lot of factors that changed due to actuarial assumptions, how the market changed, and a bunch of other things that the actuary figured out. So that had a lot to do with that changing. But in the governmental activities, there was no new debt taken. Net position, $702 million compared to $712 million, so that decreased approximately $10 million year over year. In your business type activities, your current assets, $61.9 million compared to $56 million. That was from water and sewer rates that increased on January 1st. Also, your capital assets increased approximately $10 million. That was due to new investments in capital assets. In the debt, for the water and sewer, there was $2 million in new SRF loans that were taken, as well as some debt that was paid down. On your next page is your changes in the net position, and that corresponds to the statement of activities on page 31. This is a little bit easier to read in the MD&A. Your program revenues for the governmental activities, they increased $29 million, primarily due to greater impact fees and taxes, operating grants and contributions, and also capital grants and contributions. Your expenses did increase approximately $10 million, which led to the decrease in net position in your governmental activities. In your business type activities, the change in sewer rates led to your increase, with your expenditures decreasing $2 million, so that led to the increase in net position of $20 million year over year.
So for staff, that, she said it a couple times, the changes in sewer rates. Just really refresh me on those changes. I know we've made them, but
We did
specifically.
have water, we have had a water and wastewater increase typically in January.
It's on a schedule, though.
Yeah,
Like
you
it-
had previously approved rate increases. At this coming January is the second of a 2-year
That's right.
that you'd done. Those are more in a kind of an inflationary rate adjustment that you saw from the rate study, cost of service study we presented to
right.
you a couple weeks ago. That's likely to ratchet up because of some other obligations within those utilities. The other piece is we did, and I think Jennifer referenced it, we did implement some impact fee updates at the
First.
beginning of the year. So you see those starting to ripple through
like a half a
the
year.
fund as well.
Okay, thank you.
On page 27 in the MD&A, gives more information on the capital assets and the projects that were worked on during the year. In developer contributed assets, there was 15.3 in contributed assets during the year. And then there's a whole list of assets and projects that were worked on during the year too, so. And then on page 28, there's further discussion on long-term debt. In the governmental activities, primarily, most of the debt is in general obligation bonds, 99 million. And then there's some subscription payables, 396,000. And then in the business type activities, 112 million in the SRF loans. There was 2 million additional in loans taken for the water and sewer projects. And then there's also 20 million in revenue and tax bonds and 3 million in bank direct borrowing. On page 32, these are the governmental funds. These are what you're used to seeing during your meetings. The increases and decreases for these are very similar to what you've seen, also in the government-wide. I do want to point out the fund balances. The state does require that these remain in a positive position at all times, and these have throughout the year. So I wanted to make sure to point that out. On page 87, is a schedule related to the net pension liability. There's two pension plans that the city has. There's the closed pension plan and then the TCRS plan. The closed plan, that's what the schedule's for. The funded position at 2024, this is a 10-year schedule, which gives the funded position so you could see a history. At year end, it's a calendar year end, was 67%, and you can see compared to the prior year was 73. So it tends to fluctuate. Above that is the net pension liability. That's the 78.3 million, which is in your government-wide balance sheet. Also, a few lines above that are the contributions. The city contributed 8 million during the year. Employees contributed 782,000.
Before we go further, Eric, do you mind making a comment or two on this? At 67% funded, at 73% funded, at 90%? Because, and I, since I am on that committee, I kind of understand it, but I think it's important that the board understand.
Ask Christine to chime in too. She's got great
All right.
insight on this as well. But we've seen a couple things happening. We have been adjusting we've been adjusting downward our return assumption over the last several years to be more conservative. We are required by law to be in a range of where TCRS is. We're already there, but it has been directed by the board and based on the recommendation from the pension committee to over time to continue to bring that down to be a little more conservative. We have seen the impact, and it's a snapshot in time, but the impact of market performance on where we are compared to those obligations. We have also seen some pretty significant increases in our pay to our employees over the last few years as we've continue to strive to be highly competitive, had some things we needed to respond to in the market. And I think you see that reflect here too in terms of how that works its way through the pension system and structure as well. So it's all those components. We are reaching a point where I think we're going to put ourselves on hold in terms of adjustments on those assumptions for a period of time. I think that's the nature of our last discussion with the pension committee, but I'll let Christine chime in as well and add to or correct anything I said that may not have been quite on target.
No, not at all. What Eric was referring to is a state law in Tennessee that we cannot be more than 50 basis points higher than what TCRS's assumption rate is. And one of the things that Tennessee has done over historically is it has actually just made large changes in that rate. They did not do incremental decreases. And the last time they decreased that rate, they decreased it, I believe, by 50 basis points at one time. And it had a ripple effect. And of course, the state's plan is a very highly funded plan, so it didn't make that much of a difference to the state. But to all of these small plans that are required to base their rates similarly, if we had made a 50 basis point change at one time, it would have really impacted our funding liability. So our board and our pension committee recommended to the board to decrease by 10 basis points a year. And we've been on that path for several years. We're certainly still in compliance, but we're about 20 basis points, I believe, higher than the state right now. And we're on track to be, matching up with the state, very soon. The conversation we had with pension committee is perhaps if we want to consider just staying there. Once we reach the
Yeah,
state's
once we match
rate,
the state to hold there
Would we
is
want-
probably, at one point we talked about continuing to go down, but that may be, where we want to stop.
And so that's the conversation is once we reach that state rate, we may wish to stop. And so that will be a conversation before too long. So also, of course, as Eric was talking about that snapshot in time, this is a 12/31 fiscal year or calendar year ending plan. And there have been a couple of snapshots in recent years that 12/31 has not been good for investment earnings, and that's a big part of that calculation. Certainly being a closed plan, we're not bringing new people in. All of our new employees are going to the state plan. So this plan is left with employees who are closer to retirement. There's not as many years for the plan to schedule out employer contributions to prepare for retirement. So there's lots of different factors going into the closed pension plan. But when you look at the open plan, which Jennifer will probably hit here in just in a moment, you see that contrast. And that was something that when our actuary was here for this committee earlier in the fall, he does a great job of showing that side by side of what an open plan and an open plan that has just it's a different plan compared to what our closed plan is. And the picture's a little bit different, or quite a bit different on that open open plan.
I do want to point out, with what Christine was talking about, on page 70 in the footnotes, with what she was talking about with changing the rates on the top there with the closed plan at the current rate, the liability is $78 million. If you were to increase the rate, that would change the liability to $52 million. If you were to increase it 1%, if you were to decrease it 1%, that would change your liability to $109 million. So it's incredibly sensitive to those rates. So that is a required disclosure to show you how sensitive that is.
Incredibly, you say.
Yes.
Good
Yeah.
description.
Yes. So. On page 88, this shows a 10-year history of the city's contributions to that plan. In 24 and 23, the city has contributed more than what was actually required to be contributed to that. So they are apprised of how much should be going in and have been contributing more than what was required to go in there as well. So I just want to point that out. On page 90 is the TCRS plan. That one is almost 85% funded. The liability is much smaller since that's a brand-new plan. That one started in 2017. The liability on that one is 1.3 million. That one will grow as the years go by and more employees join that plan. And the contributions to that plan are on page 91. On page 92 is the OPEB plan. The OPEB plan is structured very differently. It is a pay-as-you-go plan. Most governments pay as you go on their OPEB plans. They are not funded. So this is very typical. And
And may I just mention, OPEBS is an acronym for Retiree Health Plan.
yes. So the liability on that at 2024 is $21,850,000. That is also on your government-wide balance sheet. It increased approximately $2 million from 2023. So. Next, I was going to talk about the grants. On page 110 is the schedule of expenditures of federal awards and state financial assistance. This lists all your federal funding that the city received during the year. Katie listed during the concluding the ones that we tested. They included the Battlefield Land Acquisition Grant. The city was a pass-through to Franklin's Charge. Franklin's Charge actually acquired the Williams Tract. The city, as they drew down the money and then passed that on to Franklin's Charge, they did have some responsibility and some compliance requirements for that transaction. So we did test that, and the city was in compliance with those. Also tested the highway planning and construction cluster. Most of those expenditures related to the Harlansdale Farm multi-use path. We tested the CDBG entitlement grants cluster and the American Rescue Plan Act. We tested that. That is COVID-related funding. That has been designated by the federal government as high risk. And I believe that funding is going to run through 2026. Is that correct? Since that has been designated as high-risk funding, we are required to audit that every year that it exceeds $750,000. So we'll be auditing that every year. And we have since you've gotten it, and we have not had any compliance findings on that. So, and I think management knows we're going to test it every year, so they've kept it in order.
It's always a good assumption.
Yeah. And they know we're going to test the new ones too, so they're good about keeping that in order. On the next page is the state financial assistant. These are grants. They're primarily through the Tennessee Department of Transportation. We don't have to specifically do any compliance requirements on these, but we do do accounting. We test the accounting on these, and those are listed there. On page 167 is the summary of our yellow book in our uniform guidance testing. At the top, it summarizes our financial statement audit. We had an unmodified opinion. Our internal control over financial reporting, we did not identify any material weaknesses, any significant deficiencies. That word's escaping me. And we did not have any non-compliance material to the financial statements. In the federal awards, same, no non-compliance noted, and we had an unmodified opinion over those 4 programs. that we identified, and those are listed under there as well. And we did not have any findings disclosed related to the uniform guidance, that 2 CFR. That's what that is identifying. The dollar threshold, that 750,000 between A and B, all the programs we tested were A programs. You are a low-risk auditee. That means we are only required to test 20% of your programs. If you were not a low-risk auditee, we would have to test 40%. So a lot more testing, so good job being a low-risk auditee. It helps you out quite a bit. On page 168, goes into a little bit more detail onto our findings. One thing that our summary does not go into is another section that we were required to report for the state, and that's findings and question cost required by the State of Tennessee Audit Manual. I know you guys are familiar with the accounts payable fraud that occurred last August related to the vendor that had emailed and asked for a change in banking information. We were notified of this shortly after it happened. The city self-reported to the state comptroller's office, which is required, as well as opened up a investigation with the police department, and changed their internal controls. They did have controls in place to confirm changes in banking information over email, which was done. But people are getting more sophisticated these days and able to intercept that stuff and confirm it. So that is now confirmed through a telephone call or some sort of verbal communication. So that we're required to report that as a finding. So we have written that there in our recommendation. We said we already knew that you had changed your internal controls, so our recommendation was to do what you had already done. And we put that the view was that you had changed your internal controls. Management included their corrective action plan. This will be submitted with our report, as well with a letter to the comptroller's office with that referral letter that was submitted to them. So we will follow up on it next year. So if there's any conclusion from the police investigation, we'll follow up on that. So, is there any questions or anything else in the financial statements you'd like me to go over? There wasn't anything that was really difficult or challenging or anything we had to correct this year, so it went pretty smooth.
Jason, anything
Yeah.
from,
One thing I forgot to mention, Margaret Martin would always ask how the city's doing, and they're doing really well.
Patrick?
The city's flourishing, in my opinion. Yeah.
All right, then, if there's no other questions or comments on the audit, we will continue with item 5. Is that correct? Report of the external auditor for the Cool Springs Conference Center.
Yep. I
Who
will.
is leading out on?
That is me.
Jennifer? Okay.
That is me. I have your draft audit report. I will start with the independent auditor's report on page 3. Our opinions unmodified on our independent auditor's report. Clean opinion. We do not do a uniform guidance audit on Cool Springs because they don't have any federal funding, so we're not required to. We do a Yellow Book audit, which if we had any financial statement findings or anything like that, we would report that to you, and we don't have any findings, so there are no findings to report. The journal entries that Katie had mentioned to you, they are ones that management asks us to record and that we generally record every year. It's related to their fixed assets and distributions, things of those nature. In their MD&A, they talk about the financial highlights. The conference center, again, had a good year. They have recovered from COVID. They are very busy with their activities. They have also have some capital assets and repairs that they have put in during the year on page 6. Meeting room reader boards. They had an emergency radiator replacement, some laundry equipment, water heater, things like that they did some replacements on during the year. Oops. Here's one of my notes. Total assets for the conference center decreased slightly, stayed relatively the same. Cash increased approximately $229,000. Most of that increase was in restricted cash, which cash is restricted by agreement. It's for capital expenditures, just keeping aside cash just for capital replacement. They have a little bit of receivables, a little bit of payables, and the net position is 10.1 million. 9.1 is invested in their capital assets. The restricted is the same amount that's restricted in cash, and then unrestricted is 182,000. Most of the activity is in the statement of revenue, expenses, and changes in net position. Operating revenue was 7.8 million, which was a 7% increase over 2023. The center had a larger sales team this year, so they're able to book more events and keep up with the volume. They're having increased volume and requests for events at the conference center. Related to that, an increase in revenue is a direct increase in expenses. So operating expenses, 7.3 million was a 7% increase in expenses over the prior year. Cost of goods sold and their labor costs continue to rise. It's just something they've been dealing with. But their increase in expenses was equal to their increase in revenues. Operating income, 483,000 compared to 436 in the prior year. Other income, this is primarily due to cancellation fees. They're having less cancellation fees with COVID in the rearview mirror. Less people are canceling, so and more people are coming and having events, so that's a good thing. Income before distributions, 546,000. Distributions to local governments, that's a 50-50 split between the city and Williamson County of 616,000. Decrease in net position, 70,000. So net position at end of year, 10.1 million. Statement of cash flow. The thing I'll point out here is net cash provided by operating activities is just over $1 million, which is really good. It's your cash received from customers, offset cash paid to employees, cash paid to suppliers. And then your cash flows from non-capital is your, from financing is your cash paid out to the city and county, and your acquisition of capital assets. So pretty straightforward. In the footnotes, there was no changes this year. There's no significant changes in accounting policies, no new accounting policies to implement. So we didn't have any changes there. There's one footnote I'll point out on page 22. For the distributions, the 616,000 is a net number. The gross, if there is a loss, the city and county will contribute to the center. And if there is a surplus that gets distributed, so that breaks out what was contributed and what was distributed there. So we'll break that out. Any questions?
Any questions from the committee? Two good presentations. Thank you.
Thank you.
You want to go to item 6?
Mr. Chairman, I may just mention, though, that I believe our December 10th Board of Mayor and Alderman agenda will have the audits, the audit reports to be reported to the board. So,
Margaret, we'll look forward to you
Yes,
sitting
that's
on the
right.
front row.
we don't go through this again, but we do have to report the documents to the full board.
All right, then let's go to item 6, consideration of ordinance 2024-48, an ordinance to amend the budget of the city of Franklin for fiscal year 2024 through 2025. Katie and Jennifer, again, thank you. We appreciate
you.
it very much.
Thank you. So we are kicking off the fiscal 26 budget season. Are you doing the amendment? Are we on the amendment?
Amendment first.
Oh, I'm sorry. I thought we were on the budget. I'm sorry. My bad.
We're not quite yet kicking off
I can't wait
26
to
budget.
get to the new year.
That's the next item.
Thank you, Michael. We got to amend what we got, and then we'll talk.
Exactly.
It is our favorite time.
It is a special
Right?
time.
Exactly. Good afternoon, which more than likely is my mother. So hello, dear Mom, from Kansas. Good afternoon, Michael Walters Young, Chief Budget and Performance Officer. Ordinance 2024-48 is the second budget amendment of the year to the fiscal 25 budget. It contains 3 amendments within it. The first is for additional expense items and budget corrections. The second is for equipment purchases, and the third is for land purchases. In the general fund, there we go. In the general fund, you have a net change of $0. There is a revenue increase of $603,573. That is attributable to higher than anticipated collections in local option sales tax through the first 3 months. In the months of August and September, we averaged between 9 and 10% over year. We have done some research. We know that part of that is attributable to one-time collections which were received, which is why a fair number of the expenses that are shown are also one-time in nature. So we're not assuming that this is going to be recurring. However, over or exceeding your revenue collections is always a good place to be. So balancing that are $603,573 of expenses. Those fall into 3 buckets. The first and the largest are for software purchases and replacements. There are 6 of them. $191,942 for replacement and augmentation of the records management system in police. This was something that came up and needed to be done. That's cost is being split half between the police department and half in IT, but it still is $191,000. A carryover from fiscal 24, we purchased a new ticketing software package for our court system. So that was originally appropriated in 2024, but not fully expensed. The amount to be expensed in fiscal 25 is $78,300. $38,000 for additional storage for our e-discovery software and system in law. It turns out when the law department needs to research things, there's a lot of emails in the city, and we need to be able to expand the available storage that we have. Two items which are housed in the communications department. One is a web assistant called CityBot, which will allow the opportunity to help answer questions on the website that people have. You will see that kind of box pop up in a lot of businesses, and it is able to answer frequently asked questions and those sorts of things. $20,000 for an event permit software for our special events team. This will help automate some of that process and take some of their manual workload off them. And then $19,000 for city's debt management software, which is called DebtBook. The second piece is something you've already seen and approved. On October 8th, 2024, you approved Resolution 2024-68, which was for $197,006 for additional military service credit in TCRS. There were 6 prior conflicts which had not been included, and the new law allows us to take advantage for those veterans who are in service to the city of up to 4 years of service credit. And then finally, $38,725 split primarily between a new recruitment website for police and fire, as well as carryover of the strategic plan services, which we had originally budgeted in fiscal '24. A couple of decreases attributable to truing up debt service. You'll note we do our best when we make our estimates, and you budget your debt service in one fund. There are transfers which come over from others. Once the budget is passed, the lovely people to my right and to my left make sure that they actually add up together. Sometimes they don't. That's what's on the screen in sanitation road impact. In the city facilities tax fund, you have the expense of $174,169 for a second air curtain burner at Sanitation Environmental Services. Going back, if you remember, what we would do with brush and other things is we used to have a big grinder and we'd push stuff through. And after researching, investigating, we have a air curtain burner and we had to wait to get the permit approved from TDEC. This was originally budgeted in '24. This once again is a carryover item. Because it's a brand new item attributable to growth, it can be expensed against the city's facilities tax. Also something you're very familiar with, the increase of $3 million in expenditures from the Hotel Motel Fund for the balance of the joint purchase through Franklin's Charge. 2 separate properties, one adjacent to Roper's Knob in Hillhaven, and another parcel, part of the Battlefield Park property in downtown Franklin. You already appropriated $1 million in the first budget amendment. This is the balance of that charge as executed under COF Contract 2024-92. Increase in revenues in the debt service fund of $2,019, and the capital projects fund is an equal in and out for the aforementioned land purchase. Fund balance changes are on the screen. No change in the general fund and capital projects fund. Slight increases in sanitation, road impact, and debt service, and more sizable decreases in city facilities and the hotel motel fund. This will go in front of the full board on Tuesday night. Public hearing will be January 14th, and third and final reading on the 28th. Mr. Chairman.
Any questions, guys?
Thank you, Michael.
If there are no questions, let's go to item 7.
Go.
And now,
Consideration of resolution 2024-108, a resolution of the Board of Mayor and Aldermen for the City of Franklin adopting budget goals
Or do you need
for
them to vote on
fiscal
it?
year
Okay.
2025, 26.
Again, we're so excited to get to fiscal '26. We need to vote on the amendments to recommend that to the board.
Okay. Well,
motion to approve the prior item and
Recommend,
recommend
yeah.
to the board.
proper motion to second.
Second.
Then to have proper motion to second, let's do a roll call vote on that. Alderman Potts, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And the chair votes yes to recommend to the full board. And item 7.
All right, here we are. There's been a lot of talk about this next item. Every year, we launch in December our budget process for the next fiscal year, and that's what we're doing today, and we start with our goals. What I want to walk through with you today is our recommended goals for the fiscal '26 budget. We'll go through those. We typically touch on a couple different categories in those goals. There are financial and non-financial goals. Those tend to be pretty consistent year to year. And then we have some specific goals for the fiscal year. This will set a tone and targets for what we incorporate in our budget. Departments are working now and actually will submit their budget requests at the end of this week to our budget and performance office. So we've moved that up a little bit to give them a little breathing room around the holiday, and also to separate a little bit from the performance evaluations that everybody does around the turn of the year. So these goals help shape what we look at and how we structure a budget. And you'll see lots of presentations at the first part of next year as we start building this budget. And in January, you'll see our first cut at revenue projections as well. So before we jump in the specifics on 26, let me just touch a little bit on what some of those financial and non-financial goals represent. On the financial goal side, we focus on building and enhancing our positive financial position, implementing strong financial practices and management principles as it relates to public funds, and of course compliance with board adopted policies. We also look at providing a structurally balanced budget where ongoing revenues and ongoing expenditures are in balance, that you can sustain that over the long haul. On the non-financial goal side, we look at continuing to deliver high-quality services, being focused on the delivery of the 10-year capital investment plan, being economically competitive, and enhancing our one we added last year that we're going to continue to have on building and enhancing our employee engagement across our city team. So those are our key parts that are some ways evergreen, but critically important to building a strong budget and supporting a strong, high-performing organization. All right, so let's look at the 2026 goals. We've got a few slides that summarize that. You have updated, let's go back one, Michael. You have updated our strategic plan. That is still in process, but we have taken the liberty to incorporate the broad goal areas that were discussed earlier in the year, and you see those there. Some of those are carryovers from the previous plan. Others are new, or others are slightly tweaked or updated. But we focus on a safe, clean, livable city, sustainable growth and economic vitality, being fiscally strong, fiscally sound, quality life experiences, organizational health, and operational excellence. So you'll see those goals reflected throughout the budget, and we want to stress those as we move forward with the overarching goal of our broader vision of being America's favorite hometown, driven by excellence, balancing preservation and progress. So on to 26 goals. We will support that strategic plan. We are finalizing an update of that with a 10-year planning horizon and specific deliverables in the 1 to 3 year time frame. Staff has been working diligently on that, especially that last piece, what those deliverables ought to be in terms of citywide priorities and delivery points over the next 1 to 3 years. That will be coming to you early in this next calendar year. We want to balance, have strong growth-related infrastructure planning in terms of investment that supports our ability to support good, strong, positive growth in the community that is economically viable. Affordable and workforce housing, we know we don't control it completely, but we do want to continue to look at opportunities to support and enhance those offerings in our community. We have seen, related to the infrastructure piece, the growth plan was approved recently. The updated growth plan, the first time in over 20 years that has been addressed, was approved and accepted by the state of Tennessee. We have updated urban growth boundaries. We have strong agreements among the other cities in Williamson County and with Williamson County, and we want to have targeted infrastructure investments and growth planning that works with that updated growth plan. A couple other key components. We are doing a comprehensive review of the compensation plan. We are at that 3-year window. That is our goal, to update that every 3 years. We did advance a significant piece of that in the current budget with what we did for public safety, police and fire. We will follow that on with both updating that again if there's additional need, but also incorporating the rest of the organization in terms of an updated compensation plan to make sure we are highly competitive in both attracting and retaining the best talent we can to serve the community. We do want to continue to focus on engaging our public. That continues to be an important part, finding good, effective, creative ways to do that. Being an economically strong and vital community, being highly competitive, working with the state of Tennessee, Williamson County, and other partners to achieve that. And then finally, looking at transportation. We're updating our 10-year capital plan. We want to focus on delivering those projects, but we know transportation needs continue to be at the very top of that list, and that involves partnership opportunities that we are looking to explore with Tennessee Department of Transportation, and that'll be part of our budget planning and thinking as we bring the fiscal 26 budget forward to you. That's a quick overview of what is on the table and what will shape, in our view, the 26 budget. We welcome any questions or suggestions you have about what that should look like as we advance goals that will shape the new budget and the budget we'll work on in the first part of next year, building towards an adoption. Well, a recommendation to you the 1st of May and an adoption by the end of June for the new fiscal year. Mr. Chair?
I just believe Alderman Brown would want me to say something here, just on the page 4. And the question I would ask first is, there's always a development, or there's always something. I can't remember what exactly it said last year about infrastructure investment and funding and financing, but there's usually some sort of that is a budget goal because it's obviously something we need to do. But I think just based off the conversations we've had over the last year related to that, I would just encourage, and this may not be a modification to the actual goal, but that there would be some additional color provided to us on the board at whole, like how that can be, through this budget, we can work in some ways to do that next step evaluation, because it is going to require funds.
Right.
And if we look at that now and understand what the board and staff are wanting to do, what that looks like, it just seems to be a recurring priority that I hear as we look at all these infrastructure costs. So just, that would be my only comment. It all looks great.
Yeah, the way we've stated it, I think that's a great point. And this is a bit of a carryover because we've been working on this. Develop and evaluate options for growth-related infrastructure investment, funding, and financing for board consideration. So continue to work through what does that look like? That has, some of that is known tools like updating impact fees and those elements, but there are some additional tools that the state is starting to develop to put on the table that are worthy of at least evaluating and seeing how they sync up with certain specific needs that may be driven by growth. So I think that's what we're trying to do, but we welcome any other suggestions you have on how to fine tune that. I think what you're looking at is how does that move into some specific decisions by the board?
And or at least just making sure within the budget, and you're right, I'm not looking to change this goal per se, but just as you all work through the budget, I don't know what that looks like, but it's going to cost some money.
Yep.
And I think to come up with those options, and I think we'd be willing to speak for myself, but I don't want the budget to be a hindrance to us exploring those options as far as outside consultants or staff time, et cetera.
Okay, got it. Yeah, sort of how we support that work as needed.
And you've been supporting it, but have done so within the current budget that we have. But thank you.
And now this,
Go ahead.
is this going to need to be recommended?
Yeah, we would ask that you recommend this to the board. It's actually on your December 10th
Yep.
agenda. We have gone ahead and taken the liberty of putting it on both agendas. So there's a little opportunity to talk about it at the work session. But if you're comfortable, get it adopted because it does play into the rest of the process. So we would welcome a recommendation to the board.
I guess I would recommend.
Yes, sir. Thank you, Mr. Chair. So I had two quick things. I wanted to follow on to what Alderman Baggett was just talking about. I would really like to see, as we are moving forward, advanced planning by our City of Franklin team members to bring forward recommendations in certain areas to use some of these tools that we're talking about from the state that could be applicable, rather than kind of throwing a dart sometimes is what I feel like, and trying to get to one. And I feel like we need to be better educated, not only as a board, but I think whether it's a work session or something else, to just better understand where those tools could apply. I think that might help us as well. I know that anytime it comes up, that I want to make sure that I'm most educated about whatever tool we're trying to implement in that area of town. So just know that if we can do that, that'd be great. The second thing I wanted to point out is also on slide 4. It's the last one, not looking for any changes or anything. I just wanted to ask, we get telephone calls from, or both positive and constructive, from our city team members about compensation. And those that work Monday through Friday or work over the weekends as well, but specific to police and fire, and asking about the differences between their shifts versus those that might be an 8 to 5 type of a shift, and just making more educational presentation to those colleagues, and maybe even to us, just from a standpoint of, this is how this needs to be structured for police or for fire versus maybe the Monday through Friday 8 to 5 person.
Yeah.
And we just get those requests of saying there should be a difference, but we're trusting
Well,
the
there
method
is a
right
difference.
now. Right.
There's shift
Significant.
differential that is paid
Right.
to folks that work evening and overnight hours. That happens as a practice across the organization. So I'd be glad to try to hone in on that, but there's a pretty significant structure in place. And as you saw when we were leading into this year's budget, we look pretty comprehensively at how we compete on both overall pay, but also pay structure and other benefits that are provided as well. So
Just to continue to do that is all I ask.
yes, yeah, we do, and we do look at our relative position on how we compensate on all those different facets.
Excellent.
Thank you.
Any other questions or comments? Eric, thank you.
Thank you.
We do need a motion.
We do. Motion and vote.
And I'll entertain a motion to present this to the full board. Mr. Potts, you made the motion. Ms. Peterson, second.
I think I need to verbally say I move this forward for recommendation to the full board, sir.
Verbally saying it is fine. Proper motion and a second. Let's do a roll call vote. Alderman Potts, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And the chair votes yes on it. Do we need to show that Alderman Baggett is not here?
Yes.
For that vote. Yeah.
Got it. Okay. Let's then go to monthly reports for November 2024. Christine, are you leading that? Margaret?
I believe Margaret's going to,
Margaret, all right.
I can always make a comment on them, but I'm going to
yeah,
let Margaret.
Monthly reports, I'm just going to hit 3 highlights. Sales tax through September is holding strong. We're right about 9% year over year from prior years. Building permits are 13% higher this year compared to last year, but as a reminder, that is all based on development, so it could vary throughout the year. And then hotel motel, we are about 6% less than last year, but do remember we are coming up to Dickens of Christmas is coming and holidays, people traveling, potentially staying in our town. So hotel and motel will adjust as we go throughout the year.
In some of the reporting we've received from the Convention and Visitors Bureau essentially shows us holding about stable overall. July was a little softer across the whole county because there just weren't as many big events in the region. There had been some large ones a year ago, but we are faring better than our other folks in the county in terms of holding our own. And they do believe there's going to be some stronger performance these last couple months of the calendar year, and so we'll keep a good eye on that. But it does look like it's going to hold about steady with where we were a year ago.
Any questions?
May I make a comment
Yes,
regarding
you may.
the local option sales tax? I don't want to damper enthusiasm, but the first 3 months of this fiscal year they were much stronger than we would have anticipated. And for those 3 months compared to last year, we're actually about 10% over in collections. We have spent some time looking in individual entries on those 3 months, trying to understand a little bit more about why those increases are there. They're certainly greater than what the state economists, for example, have said that they forecast. One of the things that we're speculating is that last year, fiscal year 24, the first 3 months did have a state sales tax program. You may remember on groceries, and it was only on groceries, but we are a grocery buying town, and we have quite a few businesses that sell predominantly groceries, or much of their business is groceries here in Franklin. And there were quite a few adjustments that were required after that period was over, because businesses had to report sales taxes differently because of that. The locals were supposed to have been held harmless for that local option sales tax on groceries, but it was supposed to be only the state that people received that benefit from. But there must have been confusion in that reporting, because there was quite a few entries of businesses who didn't report correctly and had to catch up with their reporting later. So that's speculation I mean, I don't want to be a downer that we're not having an increase in sales tax, but when most of the reporting that you see, economic reporting is more of perhaps a 2 or 3% increase, and we're seeing 10%, and we know that the first 3 months of last year did have this unusual reporting period with groceries taxes. Let's just see where we're at come maybe February, March. Once we get through holidays, we get through this year-over-year reporting period of fiscal 24. So we always watch sales tax closely, being our largest revenue source in general fund. But I just want to share with you that as staff, we're looking at sales tax extra closely, because while we would love 10% to be what our final collection increase would be, I'm a little doubtful once we get past maybe some of these externalities that could have affected the 24 number. So I'm sorry to bring some downer news, but I do want to share that with this committee.
So those numbers you would know in February then, probably?
Well,
I see that'll come in.
of course, February is when we find out December.
Right.
Yeah.
So, we're technically through that period of fiscal 24 in which we were within that program, but there were so many businesses that had to catch up their reporting in future months that last year was strange because we had some really low months and we wondered what happened, and then we got caught up, and overall it looked okay. We had a good sales tax year in 24, but month by month it was all over the place, and we were telling you we're not quite sure why this is low, and then all of a sudden this month is greater. So we think we have maybe a hypothesis of why these 2 years look a little bit of the way they do. But if I was, Michael and I talk about this, chatting about where we look, what we see revenues going, or sales tax going separate from any sort of reporting issues with groceries, and certainly the 3% is a much more realistic type number than a 10%. But we will of course keep this committee informed.
And as Eric said, we'll be bringing the revenue model to you. Dylan has been feverishly working on it for several months, and taking into account the Tennessee State Funding Board economic reports from the month of November. They have a variety of different estimates. There are 4 separate economists from different state offices and universities that give ideas in terms of forecasts for sales and business and franchise and excise taxes. And I won't spoil the presentation, but I can affirm you that it will not be 10% when we reconvene next month.
Well, and I think we also need to say that the county will be doing property tax reappraisal.
That's right. This is a reappraisal cycle, so that will factor in. A lot of times we don't get that exact calculation till around the time May when we're releasing a recommended budget to you. So there may be some best guess assumptions that we may have to tweak a little bit. That's just the way that process works, but that will be something to look at in terms of how that would impact your property tax rate and something to weigh out as we look at all the different things you're trying to achieve in a budget and in a capital investment plan.
Anything else to come before the committee? I want to do two things. Do a plug for the census then.
Oh, please. Yeah.
yes.
Speaking of revenue,
No, thank you.
this is very important. We are in the midst of a special census right now. And the whole purpose of that is to update our population so that we get our fair share of what's called state shared revenue tax. And that is essentially state shared revenue, which is essentially state sales tax and some other taxes they collect that are a portion of which is remitted back to cities based on their population. That number today is around roughly $175 per person per year. So if our population is where we think it is, which is around 90,000 compared to what it was at the 2020 census, that is well over $1 million a year for the rest of the decade if we can get that count up to where we think it should be. So we are asking citizens to take the less than 60 seconds it takes to either fill out that card that you got in the mail or go on our website or scan the QR code and do it online. And all we ask for is who lives in your house. That's it. We don't get any other information. We don't get into anything else. It is information we protect, and it's only for this purpose. And so if folks can help us do that, we want to encourage it so much that we're willing to bribe you. We have now made it so that every Friday through December and the first Friday of January, we're going to draw for 2 $100 gift cards to give out to folks who filled out the special census. So you can do that. And in fact, there was some suggestion that we refuse to light the tree on Friday night unless everyone in that crowd has registered for the census. We're talking about that, Mayor. You can decide how you want to do that.
Well, I've already been informed. I have several announcements to make before the program starts,
Okay.
and one of them does address.
And that is
the
one of them.
census.
Good.
Yeah.
Very good.
So maybe tell people we may or may not like this unless we have you all get registered
But
on.
we're going to show a giant QR code.
Yeah, it will be cycling through on the screen leading up to the event because we've got people out there for really almost 2 hours before we light the tree because they just want to get there, get a good spot, and there's lots of good activities for everybody. So it should be good. Thank you for the opportunity.
And
to speak
also,
about
thank
that.
you for getting the parking for us.
Yes,
I mean,
right here.
We
Very
will
much
not
so.
get you home, though. It'll be a little bit of a slow
Yeah.
go.
And Christine, you want to address the committee.
And I want to
would.
follow up after Christine too.
I asked Chairman Barnhill if I could make a couple comments here at the end of the meeting. This is on behalf of all the folks that I work with on a daily basis, but also personal as well. But this is the last Budget and Finance Committee with Mike Lowe, who has been in service to the city of Franklin for over 25 years earlier in 2024. And Mike has served admirably, diligently, in every way as our comptroller. And even though he formally began working with Margaret Wilson as his successor back in the spring, and so we've been saying our goodbyes for a little while. I did want to give a chance for this committee to be able to recognize Mike. And something that Mike has shared with me a couple of times, and I think about this, and I'll add just a little bit to it, but Mike has told me that he has always enjoyed the work. And that is something that we all have difficult days and we have wonderful days, but if we don't enjoy what we do, we're not going to be able to perform at the level that Mike Lowe has done. And I would add that I believe Mike Lowe has also found government service and government accounting and finance to be meaningful, because if we enjoy what we do and we find it meaningful, then I believe we'll accomplish what Mike has done for us for 25 years. And I've been able to work just a couple weeks short of 8 years with Mike on a daily basis. I'm going to miss him, and I've learned a lot from him. And so I wanted to thank him, and we've got a couple more weeks to thank him as well. But I just wanted to share that with this committee, and he does have one more Bowman meeting left, so you do have
We'll
one more
squeeze
chance
that
to
in
ask
on-
him an
yeah.
accounting question.
And I'll add to that. I've had the honor of working with Mike for 16 years now. I've never managed the city of Franklin without Mike Lowe as a comptroller, so I don't know how that's going to be. I know Margaret's ready to step up. You have prepared her well, and she has prepared herself very, very well. But I'll echo what Christine said. The combination of ability, of dedication, the work. I mean, he is a worker. He works hard at it, and we have benefited greatly. And he cares deeply about what he does in this team. I've always thought, and I know it's true, that the folks that do public service well see public service as a calling. It is a calling in what you do, that you care enough and that you put those abilities to the work to benefit a community. And Mike has done that every day for 25 plus years. And we have benefited greatly from it. And we just wish you the very best. You have earned this retirement, but we are very, very grateful for what you've done for us as a team. And most of those 33 years of receiving the GFOA award has been thanks to you. And you were a great support to me when I came in on the finance side, also on the budget side before we got Michael on board, and did so many things to make sure we're doing. And I don't think I probably appreciated all the things, but know how grateful we are for you and your service. Yes.
I appreciate those comments because I knew this day would get here, but I still let people know that sometimes it almost feels like yesterday when HR told me how to get here. They said, come to the statue and don't run into it. and when I got here, that was perfect. I mean, I could see exactly. And I guess, having been 25 years, is like you said, Christine, I've always enjoyed the work. And it's always been, like you said, it's been meaningful. But it's not just the work, it's the people. Basically, all the people, say, in this room that I've got to know, gotten to work with. In essence, it's a great group of people. It's the city. The city of Franklin is a terrific city. It really is. And I've enjoyed those 25 years. And maybe just to end, I think you've made a great selection in Margaret as comptroller. She does a terrific job. And I look forward to the future.
Thank you.
Thank you, Mike. Any other comments or items to come before the committee? Mayor, do you have any?
Congratulations on your chairmanship. And I would echo all those comments about Mike, and certainly appreciate your service.
If there are no other comments, I'll entertain a motion to adjourn.
I make a motion to adjourn, sir.
Alderman Peterson, second. All in favor indicate by saying aye.
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 I don't see any opposed. Thank you, Mike.